on, we have Indoco Remedies now on our radar because that stock reported its numbers and it was quite strong actually. The formulation business has seen an over 40% rise year on year. The revenue for the company was up 34%. Margins also expanded this time around. Aditi Panandikar, the managing director at Indoco Remedies, joins us now. Aditi, thanks for being with us on the show. I wanted to start by the formulations business, which was very strong. I mean, it's 95% of sales and, overall growth of over 30% is what you saw. Is this a sustainable run rate and what are the triggers for FY23?
Formulation business is over 90% of our top line. But Indoco is primarily a formulation company, and India business constitutes around 60% of our top line, and it has grown at the rate of 38%. International business, which is fast catching up, is now close to 40% of the top line, has also grown by over 40%. In fact, all our businesses fired this quarter, and that has resulted in this kind of a growth. Coming to sustainability, yes, India business had a few tailwinds because of certain products which got a bit of an upside because of the COVID and COVID-related therapies. But even besides those products, all our products have done exceedingly well. So I feel pretty confident of being able to keep the growth rates for the international business at the same levels. India is likely to correct depending on how the covered and pharmaceutical market does.
Ma'am, just talk about the pricing pressure in the US. Is that abating a little bit? And what is the outlook for FY23?
Yeah, so fortunately for us at Indoco, our portfolio for US is largely niche. We have a decent presence and a huge pipeline in sterile products, primarily injectables and ophthalmics, and a few solid orals. So for Indoco, the pressures are not at the levels that they are there for some of the other competitors and larger players in US. But I guess at some point it will hit us. But as of now, we are pretty protected.
Aditi, good morning. What about the Goa unit? There's a warning letter. Is there going to be a reinspection? Because I think the warning letter was in 2019.
Right. So we've been calling them for an inspection because we want the warning letter cleared. The site is ready. All responses to FDA against that letter have been submitted. FDA has also acknowledged that the site looks good. It's just that because of the COVID-related travel restrictions, they could not come down. We are hoping they will inspect the site soon and clear it. As such, none of the current business is dependent for US from that site because there is no import alert. So we are able to continue to manufacture and sell there. We have some products in the future which await approval, for future patent expiries, which await approval from that site. And for that, we really hope that they will come down soon.
Okay. I was reading a report, a brokerage report, which says that your API sales could grow to 120 crores in FY23. Is that a reasonable assumption? And what is what are you looking at about 2-3 years down the line? What kind of compounded growth can we expect?
As I said, we are a formulation player, one of the rare companies which backward integrated into APIs. And we did that largely for our own need. So this year API closed with the sales of 63 crores, but they also did an internal transfer of close to 100 crores. So when we say the API business will do 120 crore in top line, that's the external sales. They're expected to sell an equivalent amount internally, primarily for our formulations which go to US. Going forward, this being the smallest business for the company is expected to ramp up in a very big way. In 3 years' time, I expect this will be a minimum of 300 crore.
All right, ma'am, thank you very much. Good speaking with you. Appreciate you joining in with that perspective on the business. And